All right. Hey folks, see Rachana Ranade here, and I welcome you all to a very, very amazing live stream. Today we are going to understand something super duper important about our Indian rupee. We are also going to understand about something which is called as yen carry trades. I'm not sure how many of you have read about this yen carry trades, something called as reverse yen carry trades as well. So honestly, today's live stream may get a little heavy uh, if you all decide that yes, we want to learn about economics, and it'll be an amazing session on mac. Okay, on at a global level, economics is what I can say. Okay, before we deep dive into what are the key pointers about INR, about Japanese yen carry trades and all, let me give a warm welcome to all the new YouTube members or maybe people who have renewed, be it Kamal, Manjunath, Neha, I I Manas Brain, maybe. LGTV channel 32. Okay. Partha Sarthi, then Rashi, then Praveen, Shubham, and Dikshit Pahwa. I think Dikshit Pahwa attends a lot of live streams. I think I know his name by now. Okay. So many people who have joined the membership. So a warm welcome to our YouTube memberships. I hope you all have subscribed for the Pro Investor membership, and stock of the month has already been released on the 5th. Don't forget to check that out. Okay. Chalo, first things first, as usual, let us quickly go through where the market stands right now, and then we will understand about uh, what would be about the USD INR scenario. So first things first, let's quickly understand about the key levels right now. Okay, this is one key level that you should be watching out for, which is 25,700. Ideally, we can take a good support here at 25,700. If tomorrow something comes out as a surprise for Japanese interest rates, where is the next big support? It's at 25,300, and this is also the same level at S2 for Fibonacci level. Okay, so 25,300 is the second support. First support ideally at 25,700. Okay, now we need to understand that if things were to go bad, what could happen? See, the moment INR keeps on going weaker and weaker, it's not going to improve our market. So it's like a chicken first or an egg first problem. If markets keep on falling, the foreign institutional investors will keep on selling. If they keep on selling, it will put a downward pressure on the rupee. It will weaken our rupee further. So it's going to be a problematic situation in such cases. Okay. Now, what we need to understand is, I mean, there have been few talks about can rupee plunge to 100 rupees per dollar by the end of financial year 26. Okay. If you ask me, my personal answer is no. I don't think by financial year end 26, by March end 2026, I don't think that this will happen. In which extreme circumstances can this happen? I mean, everything has to go ulta pulta. Okay, what do I mean by that? See, right now there are two major reasons according to me why Indian rupee is under pressure. Okay, number one, and the biggest reason according to me, is that we are not yet able to strike a trade deal with USA. Okay, because we are not able to strike a trade deal with USA, the exporters are facing the heat right now. Our overall trade deficit is not that great. I mean, November numbers have come up a little bit better, but October numbers were pretty bad. If you have checked out my last to last Thursday's live stream, I had already shown that data. If you want, I can show that data again. But exports have been hit, imports are still on a rise, and that is the reason why our trade deficit is widening. Okay, number two, if our rupee becomes weaker, will it benefit our exporters? Answer is yes. Okay, always remember, a weaker rupee benefits the exporters. Now, in such cases, many experts believe that so that the exporters get some cushion, RBI is not really intervening a lot. Okay, RBI is saying, okay, even if the rupee is depreciating, it is okay, it is going to benefit the exporters, let it depreciate a little bit. Okay, That is what many experts believe, and even I believe that maybe RBI is not intervening to a great extent right now. Okay. Now, what could happen? Let's say trade deal, no light. We are still not able to crack a trade deal before March. Number two, overall the FII selling which we are seeing right now, that continues. Are FIIs still selling? I keep on showing this data every Thursday. So will I show it today again. And if you see, uh, today, if you see 18 December, it's a small buying, 595 crores. Yesterday also 1,171 crores. But look at the sell figures. The sell figures are way huge. Like they're selling 3,600, 3,200, 1,900 crores, 3,700 crores. All these big numbers, and while buying 595 crores. That's such a small amount, right? So net till date, 21,688 crores worth, stocks have been sold. Even if you check November net sales, October net sales, September, August, all these months they have been net sellers. So FIIs, if they keep on selling like anything, can it put a downward pressure? Yes. Okay, so 2 points. Number one, we are not able to strike a trade deal. Number two, FIIs continue to sell. On top of that, let us say we see, which is very unlikely, but let's say we see a Fed tightening. Okay, if US tightens the Fed rates, in that case, again, will it be against us? Okay, let's say that the dollar becomes, so whenever Fed rates increase, okay, if Fed rates increase, their currency will become more powerful. For those who understand this relation, okay, if Fed rates increase, ideally their currency will also become stronger. Dollar stronger is equal to rupee will become weaker. In that case also, rupee may become weaker. And right now there is one big positive for us, that oil is at a sustained lower price right now. If oil starts to go up, that can be a big blow for us. That can be really a big blow for us. And in that case, we can really be, I mean, that can be a pretty big problem, right? So we have to be extremely cautious about few pointers, that are such things happening or not. RFIs continuously selling. Is the overall, what is the stance of FIIs? Are they pulling out money? Everyone knows, because of no AI stocks listed on our exchange, FIIs are still pulling out money from our market. They are not able to find out quality AI stocks in India right now. That is one more reasons why they're pulling out money out of India. All these things combined with one more point, if it happens tomorrow, then it can be a big problematic area. That can be the fifth point. So before I move on to the fifth point, let me just wrap it up. Can US dollar INR, the exchange rate, can we hit 100 rupees per dollar by 31st March 2025? I personally believe answer is no, subject to certain conditions. Number one, FIIs continuously keep on selling. That will put a downward pressure. Number two, we are not able to strike a trade deal with USA even by end of March. That can put a downward pressure. Number three, US Fed tightens rates or maybe increases rates. Fed rate is increased as an example. In that case, dollar will become stronger. Obviously, rupee will become weaker. Number four, oil starts to rise. That will put a big pressure on our imports. Again, rupee will become weaker. And the fifth point that I'm wanting to talk about is the interest rates in Japan. If Japanese interest rates rise rapidly, that can put a downward pressure on the Indian rupee. Okay. I'm not talking about Japanese rate cut. I'm talking about Japanese rate increase. And that may happen tomorrow. Okay. If Japan increases interest rate, so everyone believes that they may increase the interest rate from 0.5 to 0.75. That many people believe has already been factored in the market. But if the interest rates go beyond that, it can definitely put some pressure on our Indian rupee. How many of you are really interested to know about what is this all Japanese interest rate scenario all about? Do you want to learn about that? If yes, it'll take another 3-4 minutes at least, because that is the whole concept of yen carry trade and reverse yen carry trade? Do you want to learn about it? Yes or no? And it will be like a little bit of economics heavy discussion for next 3 to 4 minutes. Tell me if you want to know about it or not. Then I will discuss. I need yes, I need like button. Then only I'll discuss. Already a lot of yes coming in the comment section. Yes, please, yes, please. Ashutosh is saying why Japanese rates will affect us. Please explain. Okay, yes. Don't know. Okay, perfect. So next 3-4 minutes, 100% attention, and I want quick yes or no answers, because see, if I just keep on talking for next 3-4 minutes, it will be a little bit boring. So I'm going to ask you quick questions, and I want answers for that. Okay, ready? We are starting off with an important point about what is this whole thing about Japanese yen carry trade, and if Bank of Japan increases interest rates tomorrow, how will it impact our stock market? Okay, this dates back to 1990s. Back in the 90s, there was a real estate and equity bubble in Japan, and there was a bubble burst for both real estate as well as equity. Okay, like a lot of people are talking about the AI bubble right now, and a lot of people are expecting that AI bubble may burst. Similarly, there was a bubble burst in Japan back in the 90s, and it was about the equity valuations and it was about the real estate. Okay, now you tell me, when such things happen, when such big assets, the value of such assets collapses, real estate values collapse, equity collapses, there are so many organizations, big organizations, which have taken loan for their economic activities. Would they be in a position to repay the loan, or will there be a default? I think you can imagine, or you can just try and imagine what happened in 2008. Was that also a real estate bubble burst? Kind of that. I know it was a very big different scenario, but ultimately, what did the real estate prices crash? Did the economy hamper? Yes. In such cases, whoever has taken loans, do you think they'll be able to repay, or there'll be more defaults? Easy repayment or default? What do you think? I want answers. Is the chat slow? Okay, now I'm getting the answers. Samir says default, Shriram says default, Praveen says default, Aniruddha says default. Okay, a lot of defaults. Okay, right. So, okay, one more time. There was a bubble burst in equity, there was a bubble burst in real estate, overall economy started to collapse, and there were a lot of problems about debt repayment. Okay, now you only tell me, whenever there is a problem in the economy, whenever economy slows down, ideally will it lead to a cascading effect? Like what? Economy slows down, okay, overall employment will slow down. If employment slows down, demand will dash, increase or decrease. What will happen to the products? If there is overall slowdown in the economy, slowdown in the economy is equal to employment cuts. Employment cuts is equal to the purchasing power is going to drop. Will the overall demand for products improve, or will the demand drop? Will the demand decrease? I'm getting answers. Demand decrease, demand decrease. Ranjit, you are here after a long time, I guess. Okay, so demand will decrease. Absolutely yes. Now again, let's come to the next point. If overall demand decreases, what will happen to the price of the products? See, right now, what happens in an economy like India, where demand is on a higher side, more demand is equal to prices will increase. Normal basic economics, supply is more or less similar. If demand increases, price will increase. What happened back in that time in Japan? Because demand dropped, price will also decrease. I'm getting answers. Very nice. Drop, decrease, decrease. Very nice, very nice. Okay, so one more time quickly, what we have discussed till now. Number one, we said real estate equity bubble burst, overall economy downfall, overall unemployments were increasing, overall demand drops. Because demand drops, overall price also drops. This price drop can also be called as deflation. Like we have inflation, inflation opposite is what? Deflation. Now escaping deflation is something tricky. Okay, for inflation it is comparatively easy. To counter deflation, it's a little bit difficult. And to counter deflation, what they mean exactly? Deflation in the economy. You are right, Rajdeep. Yes, that is what Japan has been facing for so many years. Now, if they want to counter deflation, basically, will they have to increase demand? They'll have to increase demand. They'll have to ensure that people get money easily. Are you able to understand this? Exactly. Partha Sarthi has given one word for that. Kind of a stimulus is what is required. Correct? Right now, economy is in deflation. No one is demanding. Prices are going down. Now, some energy needs to be pumped in the economy. Some stimulus is needed. Money needs to be made available at cheaper prices, at cheaper interest rates. And that started an era in Japan where the interest rates were kept absolutely on a lower side. This stimulus was not by printing money, this was by giving money at near zero interest rates, or in fact, Japan was in fact at negative interest rates for a long period of time. Okay, this was mainly done so that people would borrow more. If they borrow more, they'll spend more. If they spend more, the demand will eventually rise, and they will get out of deflation. Okay, yes, decrease interest, uh, long time, uh, long time they did it. Absolutely, interest rate should be reduced. Absolutely, yes. Now let us quickly check how the interest rates looked in Japan. Let me show you 10 years era. Okay, look at this. Look at this. January 29, 2016. From 2016 to 2024, what is their interest rate? It's minus 0.1 interest rate, minus 0.1. Okay. Now, okay, considering all charges, la 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 la. Let's say for an institution, for a retailer, even if you are getting at 0% or maybe even small point something something, can I say it's as good as interest-free loan? As good as. Okay. Now, what, and this has happened not for 1 year, 2 years, huh? From 2016 to 2024 beginning, interest rates in Japan were flat, minus 0.1%. Okay. Now, understand what institutions did. Okay. For a long time, what institutions did was borrow from Japan. Okay. Now, important point coming up, borrow from Japan, invest in maybe US bonds, or invest in Indian stock market, invest in any other emerging market, wherever you can get more return. Okay, this was called as a yen carry trade. Okay, this is called as a yen carry trade, where basically you borrow from Japan at near zero interest rate. Okay, and once you borrow money, you are going to park that money in maybe US bonds or maybe in emerging markets like India. But of course, please understand, how will the process be? First, if you were to, so let's say I'm talking about an FII in USA. Okay, please understand this important one. If I'm talking about a FII in USA, and if they want to borrow in yen, for them, step number one will be convert dollar to yen. Correct? No, no, no. If I'm talking about FII in USA, what will be step number one? Borrow in yen. Okay. Once they borrow in yen, they'll have to convert yen to dollar. Correct? Convert yen to dollar. Then convert dollar to rupee and invest in Indian market. Correct? After they gain some money in Indian markets, then then sell the stocks, let us say, convert rupee to dollars and dollars to yen. Ulta will be called as a reverse carry trade. When we talk about repayment, it will be called as a reverse carry trade. Okay. Okay, one more time. This is a little bit tricky part. Okay, everyone please pay attention. whenever we are talking about what is a yen carry trade, basically, simple words, you borrow from Japan at near zero interest rates and you invest it in some other part of the world. Maybe in US bond as an example, that is one example I took. Or second example, maybe you invest in stock market, emerging markets like Indian stock markets or any other emerging stock markets. Okay. Now, many people say, near zero interest rate, तो क्या फर्क क्या पड़ता है? What is the big deal? Acha, there is a lot of conversion that happens. So, for example, if they want to invest in India, any FII in USA, what they will have to do first? First take loan in yen, convert yen into dollar, convert dollar into rupee, and invest in India. Correct? Now, whenever they have to repay, they'll have to sell the stocks, take rupee, convert rupee into dollars, dollars into yen, and then repay the yen. Okay. Now Samir is saying, but all these conversions will make losses. It will not make losses. It will not make losses. But can I say the profit margin will go down? For example, if on Indian stocks, everyone pay attention, that is the important point that we are coming to right now. If in the Indian stock market, if they are able to generate, let's say, 10% return as an example, okay, 10% return. Now, from that, they'll have to pay taxes. Let's say it was a short-term tax, okay. Let's say they're left with what, 8%. Then in all this conversion, again, let's say 2% gone, and ultimately they're left with 6%. Plus there is an overall currency depreciation that happens, correct? So after all this magachmari, if maybe 0.5%, 1% is left, then it makes no sense, right? So they need to ensure that they are investing in Indian market where the returns are good enough, okay? And they also need to ensure that whenever they are repaying this debt, the interest rates have not skyrocketed, okay? Now, what is happening right now is that the Japanese interest rates are increasing, okay? Exactly. Now, if rupee falls, yen falls, a double whammy. But let's see. If there is no okay, he's saying if there is no change in rate tomorrow, what are the chances? There is, many experts have already mentioned this, that there's a great chance that 25 basis points it will increase. If it increases by 25 basis points, we may not see a big hit coming on the market, but if it increases more, we can see some turbulence in the market tomorrow. I don't feel it will be more than 25 basis points. So how much? So for example, here you can see from minus 0.1%, it went up to 0.1, then to 0.25, and then currently it is at 0.5. So you can imagine when they borrowed money, it was near zero. Now the borrowing is at 0.5%. See, you may say, gee, 0.5% is nothing. Are you understanding? 0.5% also has a magnifying effect, because it's not only about that 0.5%, it's about the rate conversion, it is about how much gains you get, it is about how much the currency depreciates, it is about how much taxes you have to pay. So even 0.25% change, 0.5% change, all these things impact the decisions, okay? So if interest rates increase, there are chances that instead of yen carry trades, reverse yen carry trades may start. In short, repayment may start. Now you only tell me, if repayment were to be done, can FIIs sell more? So you can just imagine this. Last point, I want an answer from everyone. Please, correct answer. Let's take an example that FIIs have borrowed money in yen. FIIs have borrowed money in yen and have invested in the Indian market. Now, because Bank of Japan raises interest rate tomorrow, FIIs take a decision that let's repay a big chunk of the loan. In that case, will they have to sell stocks? Will the FII selling continue in such case? Yes or no? Today is एकदम high level economics. I'm trying my best to simplify it. Good. I'm getting all the correct answers and I'm getting a lot of yes, definitely yes. I hope they don't sell a lot. Okay. It's a great see, please understand. Right now, FIs are not watching my live stream and understanding, oh, is that what will happen tomorrow? They already know this, correct? And maybe that is the reason why for the last few days, markets have anyways not been performing very well. From the recent high, we are already down by 2%, correct? So typically what we say is this thing has been factored in the market, that a 0.25% rate hike in Japan is something which is factored in. See, right now over the globe, including India, we are talking about a rate cut. We're talking about a rate cut here, and Bank of Japan is talking about a rate hike. Okay, now why are they increasing interest rates? Because they are finally out of deflation. Not only are they out of deflation, they have already entered into inflation, and their inflation has gone above their target. Okay, so you can imagine, once they were struggling with deflation, and right now, if you want to see, I'll just show this to you. I'll go back to trading economics, and we will go back to Japan, and then okay, click. Why has this become slow suddenly? What's wrong? Trading economics. Something wrong with trading economics? Strange, it was opening till now. Alright. Chalo, anyways, you can believe me, okay. Right now, the overall inflation in Japan has already gone beyond their target, and that is the reason why they have no choice right now but to uh, but to take that inflation under control. And for the finally started 1 minute. I was trying simultaneously because you should see this something interesting. Trading economics. I just go to Japan, and here you can see inflation rate. Correct. If I click on inflation rate, if I hit 5 years, uh, you can see till here they were in deflation till 2021, and then you can see that slowly interest rate, slowly inflation has gone up, and the highest that it saw was Jan 2025, 4%, and the target that they have kept for themselves is 2%. Latest report, it is at 3%. Their target is 2%, so they have no choice but to increase interest rates. Okay, so all in all, this is about Japan. Aniruddha is saying everybody gone on trading economics after watching your stream. That is why maybe even trading economics was like, what? Such a huge traffic on our website all of a sudden, and it stopped working maybe. Okay, anyways, so I hope you have understood what is the concept of a yen carry trade. Something new. I hope you learned about the Japanese economy, which faced a big uh, economic crisis uh, back in the 90s. To overcome that, they started dropping the interest rates to such an extent that they were almost giving free loans without any interest. uh, or even like a negative interest rate scenario. Their economy entered deflation. Slowly steadily it started to come out of that position, but so much so that from a deflation they hit inflation to such an extent that the inflation has gone beyond what they had targeted. So all this was a deep dive, I can say, but in simplified terms, for what is the thing about Japanese economy, something totally different from what a lot of other economies are facing right now. Of course, yes, Path, you're absolutely right. Last year also we faced a meltdown due to yen carry trade. Absolutely, you're right. See here, you can see, very correct. Last year also we saw the same thing. Yen carry trades is what we saw last time. Through Michael, absolutely. All now the 600 plus people are watching on YouTube. I mean, a lot of people are watching on Facebook, some on LinkedIn, some on Insta, but only 180 likes. Okay, Yogesh says, in which of your courses can we learn micro and macro? Microeconomics has got nothing to do a lot with stock market, honestly. But yes, you can definitely learn macroeconomics important points. So I do have a separate course on that if you're all aware, and if you really want to learn about economics, there's a very nice, I'm saying, because we've taken a lot of effort on that. I can show you. Just go to stock market courses section. You can choose intermediate courses category here. Okay, because it's not like a beginner level course, it's an intermediate level course. And here you can see this economics for stock market course. In this, you will be able to learn a lot about all this. Trading economics website also have taught in detail. Okay, so you can definitely check out this course, economics for stock market. Pooja, if you can just share the link of this course in the description box also. Parthasarthi is saying likes are also similar to INR. Keep on weakening. I know. Okay. Did you like today's discussion on why all this thing is happening? Why FIIs may continue to sell, and what was the whole thing about Japan yen carry trades, yen reverse carry trades? Did you learn something new today? Say yes or no. Shri Ram is saying before Christmas they will sell more. Yeah, I mean earlier it used to be something like a Santa rally and this that. I'm not sure whether it really how much it will, but mainly it'll be. I mean, some factors like what we discussed today, they can definitely trigger more sell. Kya baat hai? So many people are saying yes, insightful, very much. Every time we learn new is what some are saying. Very informative. I'm wondering if now if I have anything left to sell. Of course, they have a lot left to sell. Waiting for Santa Claus rally. Okay. Um, all right. By the way, there's also one more important point. Yesterday, one of the one of or few images were making a lot of rounds. Just have a look at this. I'm not sure whether it's now it is visible. Okay, wait. Nandan Nilekedi and Rachana Ranade. Oh, apparently some fake website says that we are running some scheme. They look at this. Nirmala Sitaraman and Rachana Ranade. Azun kai? At least I feel that people are using my name with these big Nirmala Sitaraman and Rachana Ranade. And what are we doing? According to them, we are coming up with some scheme about AI which will provide investors with income. All these are fraudsters. Needless to again mention, but I have to do that. Even I laughed a lot. Nirmala Sitaraman and Rachana Ranade is doing something. Okay. You are popular. Thank you. Okay. Be aware of such scamsters. That Yogesh is saying, does it always happen that at the end of every year FIIs sell? A lot of times it does happen. See, earlier what used to happen that when all this online thing was not available to a great extent, FIIs used to sell. They used to enjoy the holidays, Christmas holidays, and they didn't want to keep that tension, and that was the reason why they used to sell earlier. Now we have not seen it at a great extent, honestly. Some little bit here and there is okay. No. FIs are continuing to sell due to weak rupee, global risk concerns, and profit booking despite domestic inflows. I know. Okay, Nifty Metal and Nifty PSU Bank Index retesting cup and handle breakout level. Okay, let's check this Nifty Metal and Nifty PSU. Nifty Metal. I can't see a cup and handle honestly for Nifty Metal doesn't have a cup and handle. Nifty PSU, let me check. Oh, it had an inverted head and shoulder, long back. Let me share the screen quickly. Acha, weekly time frame you're saying? So shoulder, head, shoulder. This height replicated. This target has already been hit. This is Nifty PSU. If I were to do that on a weekly, still same thing comes up. Nifty metal, I can't see a cup and handle, honestly. I mean, something like this, maybe like an inverted head and shoulder, kind of. Nifty is in green. IT sector is recovering. Okay. Fraudsters probably see you as the next FM. Okay. Gift Nifty is also in green. Okay. Japan rate interest increase will impact gold rates. Will it impact gold rates? Will it have any relation is what I'm thinking about. Because let's say these have to be repaid. No, I don't think it'll have a big impact on gold, but it can have an impact on risky asset classes. Maybe crypto can get impacted. See, I'll tell you why. I don't think this will happen that they'll borrow in yen and they'll invest in gold, correct? But they can borrow in yen and they can invest in crypto, they can invest in emerging markets. Okay. So I don't think gold will have a big impact because of the yen carry trade or a yen reverse carry trade. Or mid caps and small caps can get impacted, especially where FIIs have a lot of holding. If US dollar strengthens, Indian products will be available to them at cheaper cost. Will it not boost our GDP of our economy kindly? Yes, it will. And that is the reason why, see, the only thing is that this is a good point for, I mean, this is a good point if we are thinking only from exports perspective, right? But we also import a lot now. In that case, whenever rupee weakens, our import bill is going to definitely go up, and that can be a negative point for us. Is silver overpriced? Please explain. Okay, I'll try and make a separate video on silver. Yesterday, I did a video on gold, and I got a lot of requests that please make a similar video for silver as well. So yes, we'll do that. Okay. Crypto and dollar are inversely correlated. Oh, I just did a video yesterday. Pooja, if you can just share the link of yesterday's video about gold. So I've talked about gold from overall technical analysis perspective. I've talked about what big global banks have given a target for gold. We have also talked about what are the chances that central banks will keep on buying gold. A lot of things packed in yesterday's video. Please have a look at that as well. All right. In 1991, Dr. Manmohan Singh introduced LPG. FDI increased, yet USD increased. Why and how? In 1990, it was 17.90. 1990, it went 22.74. In 1990, it was 32. FDI increased, so but rupee depreciation. Oh, we had to depreciate our rupee back then. India was at the brink of bankruptcy. That's a whole different discussion. I mean, it'll take a lot of time. Absolutely. That can be a very good strategy. Having an SIP in gold, Bs or in gold. Saying goodbye or goodbye. Nice video, ma'am. Thank you. All right, I think this is it. It's 9:40. Today we had a nice discussion about Indian rupee and dollars. We did discuss about the yen carry trade, the reverse yen carry trade. And I hope you learned a lot about economics today. If you did, as usual, I keep on saying this, but please smash the like button. No ICICI Pru video analysis. I'd done a small carousel post, but didn't do a whole IPO video on that. But with the news that has come up today, I'm sure there'll be some action on listing. Let's see. Okay. All right. I think I've answered a lot of questions today. Feeling sleepy now. I'll see you in the next one. Till then, take care. Jai Hind and bye-bye.